Up move as well. Mayuresh Joshi of Angel Broking is joining in. Mayuresh, thoughts on a stock like Tata Motors? I mean, today the market strength is so much that even Tata Motors is finding takers, but it's been anything but a smooth ride for this stock. What would your advice be?
Oh, absolutely, Surabhi. I think all the issues surrounding the stock, first in terms of the capex plans announced, which had a lot of apprehensions in terms of how their cash flows will pan out over the next few quarters and years. Add to that the kind of import duties and the kind of destocking that we probably saw within the Chinese markets, that reflected on its volumes. And the third aspect, obviously, I think even in terms of the new platforms, what probably happens in terms of the US sales as well as the UK sales in terms of a hard landing, specifically in the aftermath of Brexit. So I think considering all these issues, you're probably expected to see some kind of consolidation at lower levels, which we probably witnessed for the stock. But for a substantial upgrade, I think volumes and the numbers will do the talking. So I think within the four-wheelers, Maruti probably still remains a preferred choice for the leadership position that it has, the kind of variants and the waiting lines, timelines for these variants as well, and the large expectations of the fixed cost absorption for its Gujarat plant actually playing out in a very positive leverage in terms of their P&L. So I think Maruti, if I have to pick and choose between Maruti and Tata Motors, Maruti remains our preferred pick within the four-wheeler space.
Mayuresh, we just have about 2 minutes to go, so just very quickly, there's been quite a bit of buying on some pharma names today like Divi's and Cadila. Do you like any of these stocks?
So Divi's had a phenomenal move, Surabhi. The expectations broadly are laid around their CRAMS business, which obviously is lumpy, but the expectations of this growing at a very fast clip and the resolution of their plant will obviously reduce a lot of the remediation costs. So the kind of margins that the management is talking about normalizing to 35-36%, I think that will positively play out on the earnings. Even in their core generics business, the kind of products that they've got, a couple of their products like Naxogen and a cough suppressant, I think they almost account for 70% of the market share. So to that extent, the generic growth in terms of top line should also be reasonable enough. So I think with a reasonable top line growth, margins about 35-36% the company is reasonably poised to post an EPS around 50-51 odd rupees. So is there a upside to the stock even from the current level? There is, I think, a 10-12% upside still left. So I think the management commentary in terms of the remediation efforts and earnings growing at very decent clip should hold out for the stock.